Alrighty, guys, it is 3:30 this Wednesday, May 21st, and that bond auction really did a number on us, and market has found an excuse to sell off. Let's pull it this way, put it this way. So pile-on effect to the downside, big move, and so far continuation to the downside. So this is very typical. You see this, and the question really becomes after the initial burst to the downside, are they going to see a snapback? Or are we going to see continuation to the downside? And you always get some sort of a snapback at one point. The question is just, are we going to get some continuation on that? And right now, it looks we got a pretty good one right up here to the 59 tens. And that was pretty neat right up here to the in J period. Came up all the way up here to the reverse retest of the 59.10s, the session lows. And then they started fading again. And right here at the 2 o'clock hour K period, they are starting to leaning, grinding to the downside. This whole thing was really difficult to work with. I mean, I was tempting to hop on a long trade, and then I was like, nah. And then short trades, you had to get in on the little intra bar pullbacks. It's very difficult to trade this stuff. Didn't do anything on the ES. I did one trade on the Nasdaq. I'll show you that. That was a much better setup. But it's at the ES, basically continuation to the downside. So after that grind down, when that ran out, they started taking this higher, and then the continuation, and this whole thing starts happening. That's when you have a potential shot at hopping on. I mean, I would not trade it in the part in the middle here, too sloppy. But after they try to take it higher and failed, start taking it lower, then you have a better shot at getting short. Not great trade location, but at least you have the direction right at that point. Not really an opportunity to get short against that tablet either. Then and they did reverse it, they're right smack in the middle here. But so 2 o'clock hour things start changing on the downside, or a little bit before. But really, it started at 2 o'clock, and so far we are getting weakness. Now they took it all the way down here to the 58.50s. All right, 58.50s, and now let's see what we get here getting into that last part of the day. Looks like are we going to get a little bargain hunt going on, or are we going to get just continuing that continued weakness? But put it this way, if they can get up above and look at capital flow, you'll get a sense of what I'm talking about. If we can get up above that three-letter edge here at the 58.65s, I think we may be in good shape to potentially at least have a range bound day or start off range bound. I would prefer for it to get up above 58.90. So if we can get up above that 58.90 resistance area, I would start off range bound. Below it, I would probably lean towards the short side. 65, that ledge is good, and it would be good if we can get up above it, but we really have to get up above that 58.90 ledge, which is right here at these two resistance areas. So the 58.86, 85, and 58.95, these two resistance areas. If they can get up above those two, I think we can start range bound with a pretty good certainty. And if not, I would just keep a slight bias to the downside to see how far they can take it. So you never know if this is an overreaction, or because the bond market reacted pretty heavily to it, and they have not recovered. They're pretty much holding at the lows. So yields coming up like that's going to definitely have an effect on the markets. So that's where we are. So if they get up above that 58.90s, I would start off range bound. If it's below it, I would start with a slight bias to the downside. And you have the 58.65 level. They're trading there right now. If they can get up above it, yeah, at least we have a little bit better close. But if they stay below it, I would just stay on the short side of this for sure. So that's where we are. Now going into for tomorrow, we have a little bit of news. We got at 8:30 we get jobless claims, Chicago Fed. At 9:45 we get PMI composite. At 10 we get existing home sales and quarterly services survey, and nat gas report at 10:30. 10-year tips auction at 1. So that's what we have. So a little bit more news tomorrow, but this whole sell-off, all related to the a shitty 20-year bond auction, and you can see how the market just it's uncanny. I mean, it's you see we have been grinding this to the upside, a little bit higher, back and forth, a little bit higher, and then just a little bit of shitty news or some event, and you see the elevator down. Boom. It's good to be able to trade that. You just have to be aggressive on that the first run to the downside. And if you were paying attention to that 20-year auction, you at least had the a little bit better shot at getting in on this earlier on. Now, normally you don't want to start chasing it on the way down because it moves back and forth in these bars pretty violently. So you had to be reasonably early on that entry, and then you can sit through it if you have the staying power. But um, we knew that there was some concerns about that 20-year auction going into the trading day. That's why we had that weakness going on. But after the market turned and we were really on the way up, then yeah, I thought really we had a shot at holding on to this. But you can see how quickly it reacts once the someone is disappointed and the algos kick in and everything freaking piles on. There's just no relief. They just kind of run it down here. And you don't want to be trading this unless you really, really feel like getting into it, you know. If you want to get short on this one, you need to get short earlier on at the initial rundown here, somewhere in this area, if you can find good trade location and stick with it. You're looking for a rotation back to the mean, midpoint, low, initial balance low. Those are the exit targets, really. The fact that they took it this far down, I mean, that would be a bonus if you have that kind of a staying power. I would be probably exiting at the midpoint or the initial balance low if I had really sat it through, but that's kind of the expectation of a trade like that. Now, this thing here, wow, it's just something. So anyway, that's the ES. So we have a couple of markers to look at. 5890s for going back range bound. 5865 is what we wanted to close above for having a shot at least not absolutely falling apart here. And below 5865, just stay on the short side of this. So no trades on the ES for me today. I did take a couple of trades on the Nasdaq. You saw in the last update, I said I had one short trade. Well, I took one short trade, got in on the Nasdaq. It got creamed on the way up here. I took one long trade, got shaken out of that. You can see that one right here. And then on the way down, I didn't know anything. I was watching this in disbelief. I did take one long trade over here, and that was after this run down here. Do you see that they start faking you out on the downside, start taking it higher. Have a pretty good move to the upside, and then it stall, start taking it lower, start heading higher. At this point, I'm thinking that they have a shot at going up to the initial balance, maybe even up to that tab. But I was down 47 on that at that point, and I when it came up and retested that initial balance low on that rotation, I just got out of it. Because I'm back up $6 and I'm pretty much break even for the day. So that's just me. Instead of trying to be cute about a trade, getting back to break even to positive to green numbers is then you can at least with a little bit less stress on you to look for another trade. I could have engaged on the short side, but I figured I can run down trading for the day. So three trades, one loser, one scrap, one shakeout, and one winner, and I'm up $6 right now. So there you have it. On the Nasdaq though, I want to get up above this area, the 21 280s. Then I'm going to feel comfortable going back range bound. On that Nasdaq, that would be above this 180, 240. Well, maybe the 230 to 40s here. If you get up above that one, I can go back range bound. I would prefer to get up above 280s, but it's anyone's guess. And right now we're waiting for the last 10 minutes. You'll see if we get the bargain hunt or not. That would be interesting. But you can see here they took out our key support areas and started retracing these single prints. That had me concerned. I mean, that's not happening. Now they're back above that ledge right here at the 180, 190s. They're barely. They're reverse retesting it is probably the better way to put it. And if they can get up above it, yeah, well, maybe I shot at starting off range bound, but I really wanted to get up past that high volume area and the 230 to 40s for me to be comfortable starting off on range bound. So, and if they can't hold the 240s, can't get up above that 240s, then we start off on the short side. So we'll see. But I mean, watch this thing now going into the last part of the day. Bargain hunt is what this starting to look like. Okay, they're starting in last part of the day, start squeezing it, and people on short positions now are going to start getting squeezed. And if they start getting stopped out and start having to cover, we may see this run back to the mean here. That could be an interesting development. But last minute trading, I'm not going to do today since I had a few trades and I just got back to break even. So I'm just not going to engage it again. Bond market though, look at that thing. They took it all the way down. This is our concern right now going into the overnight. Bond market has not really retraced a whole lot. You can see they're down here against this low, right? This big low right there at the 110.20s. That's where they stalled. If they take out this edge, we're going to find ourselves almost in price discovery to the downside. And then yields are going to start getting up to 5% and above, and that's going to be definitely an issue now. Yeah, the market has been growing. If you go back like 20, 30 years, the interest rate was way higher and the market was growing at a pretty good clip. So this super low interest rates dynamic only started after 2008 and 9 after that crazy mortgage crisis. Then went down to 0%. We've been sitting on that 0% forever, slowly creeping up from the inflation debacle. But the interest rates could certainly go back up to 5, 6% without, market really having an issue. I think it's more psychological than anything else. Maybe killing some of the small cap valuations, but overall, I'm not too worried about it. I think more of the market's going to worry about this because of their short-sighted view of what growth means. Because they're looking at quarters ahead and they think, okay, the yield's going up. That means the next quarter is going to get shitty, or we sell, 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 sell. So that's the dynamic. The short-term dynamic is what's driving the stock market lower. But I mean, you can see here, there's no retracement. I mean, after a rundown like this, you could potentially look for a retracement back to the mean and not happening. It just repriced itself and staying down here. So we'll see what happens in the overnight. If they take out these lows, the 24s and the 20s, I think we're going to have a little bit of a weakness in the stock market come tomorrow. So we'll see. And then finally, but I would start off short side on the bonds above the 111.10. I would start looking for a retracement trade. That's the way I'm looking at the bonds right now. And then Nasdaq, as I said, if they close above this 240, we have a shot at potentially staying range bound. So that's the Nasdaq. Finally, oil and gold. No trades on oil and gold for me, only those three trades on the Nasdaq. And you can see gold here starting to squeeze up above the high, the 33.20s. Just one pop here late in the session. But if it looks like this and a strong close like this for the day session, I would start from the long side and look for the overnight to extend to the upside. So if you trade the overnight, you may be a nice little run to the upside here coming. So I would be looking at buying weakness against that edge, the 33.20s. And maybe down, I'll have to think about the next edge on the downside as I redo this. But the first one is 33.20s. And if it holds there, we'll have a pretty good shot at taking this higher. And then finally, oil. Yes, back down to values, a little bit below value right now, but sloppy stuff going back and forth. Not trading oil right now. We'll see. It popped this morning on this report that they may attack Iran. But as I said, if those reports comes out, and unless, you just had to take those with a big grain of salt. Someone leaked something, someone said something, and the market reacted to it. But unless it's confirmed, I'm not going to be worried about it. So starting off range bound on oil, we are trading at the attractor right now. So they're starting off long side on gold, range bound oil. Back to the ES, and let's see if we can get some of them bargain hunts kicking in here. Getting into that in about 5 more minutes, you can get that last 10 minutes of the market. So watch that at 350, exactly at 350. You'll see a bunch of these algos kick in. It's going to either drive it higher or just create a bunch of volatility. But 5 more minutes, and then we'll see how the end is going to look like. All right, guys, I'll see you back in the morning. You guys have a good weekend. Have a good weekend. Good evening. I'm too early. A few more days. All right, guys. See you tomorrow. Later.